Who does not like their money to grow? Some want it quickly while others plan it and divide the growth as per their financial goals. It may take time to build wealth, but if you don't know the formula, well, you may never be able to crack the power of creating more wealth and get higher returns out of your investments. So in this video, we are going to discuss how to get rich with power of compounding. The video is going to be amazing. Make sure to stick till the end. Now before we get into this video, make sure to hit that subscribe button and leave a comment below saying I subscribed. I will try my best to reply to as many comments as possible. Everyone wants their money to grow. Some people want it to grow quickly, while others are willing to take a more patient approach. The important thing is to have a plan and to stick to it. If you don't know the formula for building wealth, you may never be able to achieve your financial goals. One of the most important lessons in your investment journey is that of compounding interest. It is a powerful financial concept that can work wonders for individuals seeking long-term wealth creation. Compounding involves reinvesting the interest earned on an initial investment, allowing your money to grow exponentially over time. Understanding the ins and outs of compounding interest is crucial for individuals looking to secure their financial future. Here's an example of compounding interest. Invest $1,000 at 5% interest compounded annually. After 1 year, you'll have $1,050. After 2 years, you'll have $1,102.50. Your money grows faster and faster over time. The longer you invest your money, the more time it has to grow through compounding interest. This is why it is so important to start investing early. Even if you can only invest a small amount each month, it will add up over time if you are looking to secure your financial future. It is important to understand the power of compounding interest. By investing your money and reinvesting your earnings, you can create a nest egg that will grow over time and provide you with financial security in the years to come. Invest regularly. Consistency is key to making compounding interest work in your favor. Invest regularly, whether it's monthly or annually, to ensure a continuous stream of contributions that can compound over time. Automating your investments can help maintain discipline and ensure you don't miss out on potential growth. Investing regularly, also known as dollar-cost averaging, involves investing a fixed amount of money at regular intervals, regardless of market conditions. This approach can help reduce the impact of market volatility on your investments. When prices are low, your fixed amount of money can buy more investment units, and when prices are high, your fixed amount of money can buy fewer investment units. Over time, this can potentially reduce the average cost of your investment and help you build wealth. To invest regularly, you can set up automatic contributions to your investment account, such as a 401k or IRA. You can choose the amount and frequency of your contributions based on your financial goals and budget. It's important to choose investments that align with your investment goals and risk tolerance. You can also consider investing in low-cost index funds or exchange-traded funds, ETFs, that track the performance of a broad market index, such as the S&P 500. By investing regularly in a diversified portfolio of investments, you can potentially achieve your long-term financial goals and build wealth over time. Choose the right investment vehicles. Compounding interest is when you earn interest on your interest. This can help your money grow faster over time. Some investment options that offer compounding interest include fixed deposits, mutual funds, public provident fund, PPF, and tax saving schemes. It is important to understand the risks and returns associated with each investment vehicle before you invest. You should also diversify your portfolio, which means investing in a variety of different investments to reduce your risk. Several investment options provide opportunities for compounding interest. Look for investments such as fixed deposits, mutual funds, public provident fund, PPF, and tax saving schemes that offer compounding benefits. Understand the risks and returns associated with each investment vehicle and diversify your portfolio accordingly. Reinvest dividends and interest. Compounding is the process of earning interest on interest. When you reinvest your dividends or interest, you are essentially earning interest on your interest. This can lead to significant growth over time, especially if you invest for a long period of time. For example, if you invest $1,000 and earn a 10% return each year, your investment will be worth $2,593.74 after 20 years. However, if you reinvest your dividends and interest, your investment will be worth $6,727.49 after 20 years. That's a difference of over $4,000. So, if you want to maximize your investment returns, be sure to reinvest your dividends and interest. Stay invested for the long term. Compounding interest is a powerful tool that can help your money grow over time. However, it is important to remember that it is a long-term strategy. If you withdraw your money prematurely, you will not be able to benefit from the full power of compounding. It is important to stay invested for the long haul and allow your money to grow exponentially. Patience is the key when it comes to reaping the rewards of compounding. Compounding interest is a long-term strategy. Avoid the temptation to withdraw your investments prematurely. Stay invested for the long haul and allow your money to grow exponentially. Patience is the key when it comes to reaping the rewards of compounding. Crack compound frequency. When you invest money, you earn interest on your investment. This interest can then be added to your principal, which will then earn interest on itself. This is called compound interest, and it can help your money grow faster over time. The more frequently interest is compounded, the faster your money will grow. For example, if you invest $1,000 at 5% interest compounded annually, you will have $1,050 at the end of the year. However, if you invest the same amount at 5% interest compounded quarterly, you will have $1,051.27 at the end of the year. This is because you will earn interest on your interest 4 times per year, rather than just once per year. So, if you are looking to grow your wealth as quickly as possible, consider investing in options that compound interest more frequently. Increase investment. Investing in financial instruments such as stocks, bonds, or real estate property can generate future income and increase value over time. You can invest nominal amounts, such as purchasing low-priced stocks, depositing small amounts into an interest-bearing savings account, or saving until you accumulate a target amount to invest. As your income grows, consider increasing your investment contributions. By consistently adding to your investment portfolio, you accelerate the compounding process and enhance your wealth-building potential. Businesses can build up their stock of physical capital, which increases their capacity to produce goods and services. For a firm to continually increase its stock of physical capital, it must invest in new physical capital faster than its current physical capital is depreciating. Stay informed. To make the most of your investments, it is important to stay up to date with market trends, financial news, and investment strategies. You should also regularly review your investment portfolio to ensure it aligns with your financial goals and risk tolerance. Be prepared to make adjustments as necessary to optimize your returns. Stay up to date with market trends, financial news, and investment strategies. Regularly review your investment portfolio to ensure it aligns with your financial goals and risk tolerance. Be prepared to make adjustments as necessary to optimize your returns. Seek professional advice. Seeking professional advice can be helpful in career development. For instance, if you are unsure about your career path or want to explore new opportunities, you can seek advice from a career counselor or mentor. They can provide you with guidance on the skills and qualifications required for different career paths, job search strategies, and networking opportunities. Additionally, they can help you identify your strengths and weaknesses, set career goals, and develop a plan to achieve them. If you're uncertain about investment options or need guidance, seek advice from a qualified financial advisor. They can help you develop a personalized investment plan that takes advantage of compounding interest while considering your unique financial situation. Educate yourself. Take the initiative to educate yourself about compounding interest and other financial concepts. Read books, attend seminars, and leverage online resources to deepen your understanding. Knowledge is power, and the more you know, the better equipped you are to make informed investment decisions. Harnessing the power of compounding can transform your financial future in India. By starting early, investing regularly, choosing the right investment vehicles, reinvesting dividends, and staying committed for the long term, you can unlock the true potential of compounding. Understanding compound frequency, increasing contributions, staying informed, seeking professional advice, and educating yourself further strengthen your financial journey. Remember, compounding interest is a journey, not an overnight solution. Be patient, stay disciplined, and watch your wealth grow steadily over time. Let us know your opinion in the comment section below. This was all for today. Hope you liked the video. Subscribe to our channel and stay tuned for more interesting videos. Stay safe, and we will be back soon with another video.